Okay, guys, I know you're super busy right now dealing with the overcapacity issues at your company, everybody in the transaction being on edge and homeschooling your kids. Part of building a world-class real estate and or mortgage business is having a command over what's going on in the market. So that when your clients and referral partners ask you, is this a good time to buy? Is this a good time to sell? Do you think house prices are going to go up? Do you think house prices are going to go down? Um, hey, where do you think rates are heading? Okay, I want you guys to feel totally confident in your answers. I've spent the last few weeks researching data and I've picked out the graphs and charts that I think get right to the point and will help you gain clarity about what's going on right now, and then also to give you what I think, and I want you guys to form your own opinion on what most likely is going to happen in the future based on data, not on emotion. Okay, so before I begin, I want to bring up one point. I was shocked when I was doing all this research about how much there is what I will call the doomsday brigade is out in full regalia right now. Every time an economist anywhere posted anything positive about something, it was shocking to see about 12 comments of people just beating them up and telling them why the whole world's going to end. If you don't know what the new doomsday brigade is, it's where people come out and they're predicting impending calamity, especially concerned with or predicting future universal destruction. Okay. So there is a force right now that is trying to make you stay in a state of fear about the future. Does that make sense to everybody? I'm going to say that again because it's really real. Um, Honestly, guys, I think it's more right now than during about 2007 and 2008 range. So I'm going to say this again because I want you to get this. There is a force out there that is trying to make sure that you always stay in a state of fear about the future. Okay, so be aware of this force. They say things like this, and a lot of this is founded, and there's honestly real concerns in there, but they're not taking the next step and looking at the data. They'll say things like, hey, what about the 42 million mortgages that were not paid last month? What about the moratorium on rental evictions when they left? What about people getting laid off? What about the people that can't work full time because their kids are at home right now? What about prices being so high? Aren't we in a housing bubble? Derek, there's going to be a wave of foreclosures and short sales like what we saw in 2008 and 2009. And this is interesting too, is people are saying, hey, there's going to be no refinances once rates go up. Okay, so there's a lot of doomsday out there. And as I said, they're valid concerns, but it's really important to get educated on the data so that you make your own opinions. So, because when you make your own opinions and you believe in this, there's nothing more powerful than your own positive beliefs about things. Okay. So, your clients, and this is really to summate the whole thing, your clients are literally craving right now to hear the truth from someone that they trust. Okay. And your clients trust you. That's why they do business with you. And they are craving for you to give them the truth based on data. So, let's get right to it. This is probably the best slide I've seen, guys. There's so much to this slide. If you're gonna take a picture of one slide, this is the slide to take a picture on. Um, I love this slide because it gives a context of what's happened over the last 20 or so years. It's like 25 years almost in here. What's going on, and it can give you a lot of perspective about what's going on. So just to give you really quickly, the red lines are purchase volumes. So realtors and loan officers key in on the red line. The blue green is refinance volume. And so obviously just lenders on this one. If you look over here, the years are at the bottom. So right now my mouse is showing 2020. So 2020 is being projected. This is by the MBA, by the way, guys. So the MBA is the most conservative of the big three that make predictions. Out of Fannie, Freddie, and MBA, I took the most conservative for you guys. Okay, Fannie and Freddie is predicting more. Okay, so if you go to 2020, it looks like this is going to be our second best year ever in history right now. I know that's not news to you guys, but it is interesting to look that refis are not that much higher than purchase volume in this year. If we start going to 2021, where they're starting to make predictions, and we'll talk about how they're going to make the predictions in just a second. Realtors, hey, listen, the rates, the rate of purchases look like it's going up, and into 2022 as well. So, And if you look historically, realtors and loan officers, we're going into some of the best purchase markets in the history uh, of our business right now. Okay, so first off, realtors, I want you to feel really, really confident about the future moving forward. Now, lenders, okay, a lot of people, this is causing a lot of panic. They see, hey, refis are going to go from this level down to this level. This is what I want you to hear. They don't fully go away, though. Okay. There's always going to be consolidation of debt. There's always going to be people taking money out of their primaries to buy seconds and investments. And if you've been around for a little bit, you know this too, which I haven't heard in a long time, but there's going to be cash in refinances coming up too. People come into money and they'll put 200,000 onto their house. And even if rates are 4.5, they're still going to take that rate because they need the lower monthly payment. So we still project out, and I project you're still going to see refinances. So watch that myth. I hear this all the time that people say, hey, listen, refis are going to go away. That is not the truth. And also for this market right now, guys, the refis are what turn into purchases in the future. When you're doing your VIP client for life business, the way that we teach you guys to do this, okay, the refis will buy again. And the refis have sons and daughters that will buy again. And the refis have friends and family that are going to buy again. Okay, so don't neglect those. Our industry is sometimes almost shames people for talking about refinances. And I just want to let you guys know a refinance is not a refinance. A refinance is a person's financial outlook. It is really important for us to take care of the business as well. So I'm going to shut up for just a second and let you guys kind of absorb if you want to absorb anything else on this one. I think this is really, really big. Before I shut up for a second, look over at 2008. Yes, the volume was low. Okay. But look, it didn't go away. It was 1.5 million. So everybody talks about this awful year in 2008. It's not like it never goes away, guys. Okay. So there's this irrational fear always that this is our last loan or this is our last listing, right? It is not true. It's not true. And that's why I want you guys to see the historical context. So look at the worst years we've had. There is still business during these years. Okay, I'm going to shut up for 10 seconds. Okay. Got your pictures and everything of this one. Now let's move on to this. I don't know if that's the one I wanted. Yeah. Okay. So what are the economists saying? Like what, like, hey, how are they basing their decisions on this? How are they saying, hey, listen, I think that the housing market is very bullish. I didn't find one that wasn't, by the way, guys that were just on Datas. And what they said is 70% of the reason why is because of interest rates and 30% is because of the lack of supply of homes. So let's do a deep dive into those numbers right now so you get it. So let's start with interest rates. This was September 16th. Okay, so a couple days ago, Wall Street Journal. You guys know that the Fed met last week. The Federal Reserve signals interest rates to stay near zero through 2023. This is different. Okay, about a month ago, guys, I did a Motivation Monday and I told you guys about this. At that point, they said through 2022. Okay, so what's changed in 30 days is they are now saying that they are going to keep interest rates low through 2023. Okay. And so what does that's a big deal, right? That's 3 years away. And what that means is, and for anybody, I know you guys know this, so I'm not insulting anybody's intelligence, but let's just go over it for a second. Is worst case scenario over the next 3 years is a 2.757 year arm. Okay. The Fed does not control the long-term interest rates. They control the short-term interest rates. Okay. So this is why, hey, realtor friends, you can be very positive with your clients about how in the next 3 years, how the market's going to look and why you don't think that you're going to see a dip in housing prices. It's simply going to be cheaper to buy at 2.75 than to rent. Okay, so now let's talk about fixed rates. And that's a big deal because, guys, just so you know, 2023, you might see a big spread. You might see 2.757 year arm and you might see 5.5, 30 years. Okay, so don't buy into that's a bad thing or the market's going to stop. Okay. So here are the long-term projections. There's a lot of numbers on this data. If you want to go through all of them, take a picture and form your own opinions. The ones that I underline is what I want you to focus in on. Okay. All the way to the right, this is the MBA's interest rate long-term 30-year fixed um, projections. This year, 3.1 average. Next year, 3.3 average. In 2022, 3.6 average. Okay, so why are rates in a low right now is because we are in a recession and the Fed is buying mortgage backed securities to make sure that long term rates are going to stay low. This will start trending up as the economy improves and we get a viable vaccine for COVID. Okay, I want you to take that statement, maybe write it down. This is where you can provide really good honest outlook to your clients. Yes, long-term rates will start trending up as the economy improves and we get a viable vaccine for COVID. Okay, this is why this next graph right here, I want you guys to all key in on this one. This is why rates are not close to going up right now though. Okay, here are the lines on this deal. The red line is the 30-year fixed rate. Okay, so it's averaging 2.99 right now. The yellow curve is how much lenders make per deal. The other word for that is margin. Right now, we are at almost all-time highs of what lenders make per deal at 231 basis points. This is not something to get mad at your lender about or your company or anything. Literally, guys, every lender is doing this right now. They're doing it because volume's off the charts and they do not have capacity to handle the volume. Does that make sense, everybody? Every company's doing it right now. This, though, is what's going to happen. Is look down at this graph back in January and February. Let me put my mouse here so you can see it right around here. Okay, it's around 180 that they were making, and last year they were somewhere between 160 and 170. Okay, the lenders have a long way to go. So even if the 10-year bond yield, which is the blue line, this is how they price it, their rates, even if this 10-year bond yield starts going up, okay, the lenders have a lot of padding in there that they can bring down their margins and rates are going to stay low. Does that make sense, everybody? Okay, so there is no fear about an impending rate increase because even if you see something in the economy, let's say next week they get a vaccine. Oh my God, they got a vaccine next week, and you see the stock market pop and you see like the bond markets pop. The lenders still have money in there right now that they can mitigate that. Okay. I'm going to keep this up here for 10 seconds. If you want to take a picture or form any of your own opinions, that's totally cool. Okay, now we're going to talk about the other 30% of the reason why the housing market's going to remain good for the foreseeable future, according to economists, not according to Derek, is because of lack of homes on the market. This, guys, go to Wall Street Journal right now, WSG. This is J. This is the headline right now on the Wall Street Journal. I just picked this up this morning. Americans want homes, but they have rarely been fewer for sale. Buyers are rushing to get more living space as the pandemic continues, but many potential sellers are keeping their homes off the market, resulting in the worst drought on record of previously owned homes for sale. Okay, this is the historical graph. This is Freddie Mac. My doorbell rings right now. Just pretend you didn't hear it. This is Freddie Mac. So we're guys, we're obviously all the way over here, and it's a little bit lower right now. It's under 4 months. Now, these are all the years that give you the context. So this is another important graph that you can use. I mean, this graph goes back 50 years, so more than 50 years. The other times when supply of homes was at this kind of low was in between 2000 and 2005. During those years, for any of you lifers that were around during that time, you will know that the reason that it was so low was because of the available credit. Like literally, for anybody that, if you're a millennial and you weren't, literally you didn't have to document loans during that time. I mean, it was insane. Like if you could breathe, if you could fog a mirror, you got a loan during that time. That's why we had this supply shortage during that time. It wasn't based on any fundamentals. Okay, I'm going to go into the fundamentals now about why we have supply short, but it's not the same thing. Talk to any lender, anybody out there. It is, it's blood and urine samples to get a loan right now, and that's a good thing. Okay, so let's go to the next graph. Why are we in a home shortage right now? This is an interesting one. Supply will remain low because of baby boomers aging in place. I wouldn't have predicted that last week. If you asked me why is supply going to remain low, I wouldn't have known that. But this is a really interesting graph right here, guys. Okay, so the green line is the previous generation. The blue line is the baby boomers. Okay, baby boomers all the way to age 85 stay at the same home ownership rate as they did when they were 67. In the previous generation, that went all the way down, almost dropped more than 40%, because at that time, a lot of people were moving to assisted living facilities or retirement homes or things of that nature. People aren't doing that now, and because of COVID right now, I think that that trend is going to continue and even get worse. So that is a big one right now because baby boomers are a huge generation. And then here's the second reason why supply is going to stay low. Millennials are going to hit their peak buying years in 2030. Let me tell you how we got that number. Okay, watch this graph right here. Millennials, if you look all the way at the bottom, you'll see that the I lost the whole thing. Now I'm on a whole different presentation. Hold, please. All right. If you look down here, the millennial generation at age 21 is right here. Okay, so millennials right now are about 27 to 28, the peak part of the millennial generation, which is almost 5 million people. The next graph I'm going to show you, I'll keep this up here for a second so you can see it, but you can see how many people the millennial generation have, and these people are just about to hit their peak buying years. And this is a graph that when do people hit their peak buying years. It's the pink line right here. So if you look all the way over here at 2020, about 33 is the age when people become, that's the average, when people become first-time home buyers now. Millennials, the peak part of millennials and that 5 million, which you're buffered on each side, is 27. So over the next 6 years, you're going to see a lot of demand for first-time home buyers from this generation. Does that make sense, everybody? There's another reason that when you talk to economists that don't have skin in the game, whether they're trying to predict anything, they're just giving you data, they always point to this one. This is a big one right now. So you're going to see a wave over, and it's not just in 6 years and then it's going to die. You can see that there's a good, really long-term trend that's improving right now in here. So let's go back to some of those concerns that I was talking about before in the beginning. Is that this is, I don't know if you guys know Ivy Zelman. She runs Zelman's Zelman and Associates Housing and Research Consultancy. She's a consultant for Wall Street on the housing industry. These are her quotes. For the people, remember when I was talking about the Doomsday Brigade and them having concerns about the 42 million properties that weren't paid last month? They were concerned about foreclosures and short sales. This is what she pointed to, is she said that if every single FHA loan that is currently in forbearance came to market all at once, let's say in 2 months, we would only be at a normal level of supply. Does that make sense to everybody? Okay, that is a big, big thing to wrap your head around. Here's another thing to wrap your head around. Hey, Derek, these people might lose their jobs. Hey, Derek, that all the other stuff that Doomsday is talking about, This is what she said. Now, this is a human psychology type behavior. So check her on this. I've checked her on my own. I know I would do this. Um, if people have equity in their homes, they fight tooth and nail to keep it. It is only when homes are upside down that people walk. Do you guys believe that? That's a human psychology thing. For any of you guys that lent through 2008 to 2009, we had a lot of stuff going on, but I didn't know anybody that walked away from equity in their homes. The thought pattern was, I'm upside down by 150 grand. I lost my job. Why am I going to hold on to this? Does that make sense to everybody? So I can concur with her. I'm okay with this prediction. I study human psychology a lot in terms of coaching and stuff. I feel good about this. That's exactly what I would do. If I had 50 grand in my house and I lost my job, I would never let the house go to foreclosure or short sale. Yes, I might sell it, but I would sell it and take the 50 grand and potentially rent with that or something. Um, I would never let it go to a there's short sale isn't even applicable in that environment. So let me give you some of my takeaways in doing all this research over the last couple weeks here. Housing is the American dream, okay? And I fully believe it is going to remain the American dream for a long time. It's the best way for Americans to build wealth now and in the future. And as I said, it is the American dream, and it's going to remain the American dream. And that's what you guys literally get to do, is you get to help people achieve their dreams. That's the business that you're in right now. You're helping people achieve their dreams. That's why you guys are so important to me. That's why you're so important to the market. That's why you're so important to our economy. You guys are doing great work, and you are here to help people achieve their dreams. And if you're a lender, you're helping people get one step closer to financial freedom through refinancing. You guys are super special. You guys are needed. You guys are at the forefront of this. I don't know if you guys remember this back in April or March, where I was saying that, hey, listen, we're going to lead us out of this. We are the reason that we're going to get out of this mess this time. This is not 2008. This is not 2009. And now you guys are living it. And that's why you're in overcapacity right now. I talked about this a little bit in the beginning, but the clients that you are helping right now become your future business. Okay. You guys are getting unbelievable amount of looks at people. Take the people that are your A clients, people that you want to serve for life, put them in your VIP client for life program. This is the opportunity in the future, because here's the truth. When, not if, but when we get the rate start going up right now, you guys are going to see people panic. You're going to see people get out of the business. Guys, I'm not kidding. Like, can you believe this? In March of this year, we lost 5 loan officers, that not because they didn't want to be in coaching anymore, but because they wanted to get out of the business because they thought it was all going to go away. We had about a 2-week blip. Do you guys remember when you had to pay a bunch of points to get a rate, and the market almost stagnated for a second, from about March 15th to March 30th. The people that didn't do the next one that I'm going to talk about and didn't have it panicked and got out. Can you believe how much money they lost by getting out? I don't even know if you can quantify that. And that's why number 3 is so important to us as a coaching community, is to help you guys complete your personal financial milestones. Okay. Because those people were the people that didn't listen to that speech, that were like, Derek, you're just blah, 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 whatever. I want you guys to feel super powerful. I want you guys to feel super educated. I want you guys to have no fear or panic in your game when we get the vaccine and you see the market start to move. Okay, I don't want any fear. Your companies are going to be in fear. Your managers are going to be in fear. The market's going to be in fear. Your competitors are going to be in fear. Okay, and the way to make money always is that you be greedy when everybody else is in fear. Okay, and the way to do that is a tactical thing where you paid off your debt, you're out of debt, you've got the 18 months, and you feel really, really good. And you know that you've done the VIP client for life during this whole time, and you know you're going to have future business. Is that cool for everybody? This is a big deal. Okay, it is a huge deal. And once you've been around this business long enough and you know the cycles, You see the patterns, and so it's so important to us to always be giving you guys what's going to go on in the future. And then the fourth thing is protect yourself mentally from the fear of the doomsday brigade. The doomsday brigade is out right now. I've listened to I've listened to some company speeches, and CEOs of companies are in fear. Not bad people. They're not doing anything wrong. They're just in fear right now. There's a lot of people in fear. If you turn on the news for 10 seconds, you'll just get bombarded with worry and doubt. If you walk to your mailbox and you see somebody walking, I've never experienced a time where people are just anxious and then they want to talk about it and then they have to do that. When you are armed with this information that you have right now, you can be calm, you can help people, you can serve people. And again, your job, as it was right when this thing started, is for you to be the calm in the storm. Okay? That is your job. Your job right now is to be the calm in the storm. You guys are the trusted advisor. You guys are the people that they trust. They're looking to for real data. They're not looking for any kind of political spins right now. They're not looking for not looking for anything but like, hey, are we going to be all right? Is it all right for me to buy a home right now? Is it the right time to refinance right now? What if, what if, what if? And if you can be the calm and you can come at it with real data right now and to help these people, you're going to see that your business is going to thrive for the rest of your careers. Okay, so protect yourself mentally right now. Lean into coaching. Show up for every coaching right now. Guys, this is our message. I am over, and we are over the top committed to get you through this time in a successful way and in a way that you're thriving and the way that you're set up for years to come. This is and remains the opportunity of a lifetime right now. So reach out if you need anything. Reach out to your coach. If you need anything from me, reach out to me. And we are here to help. You guys have an amazing Monday, and I'll talk to you soon. So if you want to stay on, if you have any comments in the chat box, you can right now. If you feel like, dude, I got 150 emails I got to get back to, you're totally dismissed too. But if you want to have any conversation, if you want to ask any questions, if you want to debate anything, I'm here to help as well. So I'm going to look in the chat box. Clint Elliott, how often are NBA predictions accurate? I think that's a really good question to ask. Here's the deal. This year, when I did the predictions, Clint, for 2020, I will tell you that there wasn't one economist that predicted rates would be in the 2%. Not one. Okay, so there's always going to be some macroeconomic things that happen. That is why we teach the financial part too in the 18 months, because not one person predicted COVID would happen and rates would go into the tubes. There wasn't one. So the way that I approach everything is I look at everything and I use it as a guide, and then I go deeper. Exactly what I did with you guys here. It's like, all right, how is the NBA being that feel that good about it? And then I just listen to economists and I look at data. And I'll tell you this, guys. I don't know if anybody knew me in 2007, but I absolutely was predicting that in 2007, and it was because of the lending standards. Like you can't. It was a Ponzi scheme, right? And there were good economists that were predicting, hey, we're going to be in trouble right here. I don't hear anybody's, and I don't think that either. So that's my kind of that's my take on that, on predictions, how I look at them. Do you have any stats on number of loan officers in the country? Is the number increasing or shrinking? Tyler, that's an awesome question. I do watch that. I did not watch that for this presentation. I just stayed right at market data for this presentation. I didn't want to go into the loan officer one, Tyler. But I'll tell you this, I will watch that moving forward. I don't know. I gotta assume that when anybody hears easy money or something like that, you're going to see more loan officers. I think right now you're going to see loan officers get in the business. But I don't know if we have any numbers yet on that.
Dee, turn your video back on.
Oh, okay. Jason Russell said, average age of an LO last I looked was 55. That's about right. How I remember it too, Jason. It's somewhere between 53 and 55. I think it's an amazing, if any of you guys are young listening to this right now, this is an amazing opportunity for you because a lot of people don't get into these businesses at this time. Um, Last I looked, Mac, it was Mac says 172,000. Last I looked, it was 300 licenses. But then, you know, how do you get into? Are they just LO, junior LOs if they're just licensed? So I'm not sure, but I will look in that. Who else? Does anybody else have anything they want to talk about or discuss? Yeah, 327. That's about the number, and so that's up. Because the last time I looked, which would probably be a year ago, it was about 313 if I'm remembering correctly, which is what I think too. I think you're going to see more loan officers get into business right now. Just so you know, guys, unless they're hearing this kind of message, the minute that rates go up, then they go back to any kind of salary jobs. Let's talk about something else really quickly too that I want all you guys to hear. This goes for, let me talk to realtors first. As I said, I think your business is only going up from here. I think you can be wildly confident if you want to hire people to your team. Loan officers. This is what I would suggest is be very, very cautious right now. And that if you're hiring based on fundamentals. You're hiring based on your VIP client for life. You're hiring based on good projections. You're hiring based on 2019 numbers. Were you in a good spot in 2019 and wanting to hire anyways? That's a really smart way to hire. Again, using the MBA predictions from 2.8 to 2.1 million. Let's run some. This is if you get around me long enough, I always pull out a calculator. Let me pull out my calculator really quickly. So the MBA, which was conservative, which is a glowing prediction, they said 2.8 to 2.1, so that's 0.7. 0.7 divided by 2.8. So a 25% decrease in volume next year. Okay, that's substantial. That's a substantial number. And so, but this is what I want you to hear is you go, yeah, but it was right in line. I don't know if you guys remember that graph. Right in line with 2019 numbers. Okay, so where were you at in 2019? Now, if you're new to the business or you weren't jamming in 2019, and now you're doing our systems and you've got it, you're building a good business and you're building a long-term business, I think it's super wise to hire. There's going to be a lot of good people on the market the minute that rates start trending up. Okay, and you guys, for our really successful LOs, you know this, your processors, your assistants are getting poached right now. There's companies that are just going all in. They're saying, hey, listen, we'll give them, I mean, the numbers I'm hearing are crazy. Like what some of these people are getting, the processors and the underwriters and the assistants, they're getting really crazy numbers. And what they're saying is, hey, I'm going all in on this refi boom. If it lasts for 3 months, great. If it lasts for 6 months, boom, great, whatever. We're going to maximize it. And we have no problem. This is what they're saying in back rooms. And we have no problem firing those people once the refis go away. We have no problem with that. So this is what I want you guys to get. If you guys if you can get into strategy, if you can make it these 3 to 6 months with your current team, the talent that's available and what you'll have to pay that talent will be dramatically less at that time. Does that make sense to everybody? This is a big deal. Okay, so we'll see how close I am. I'm predicting April. This is my best guess. When do you start seeing rates start going up? The economists say it like this: when you see two quarters of growth, so we're out of a recession, and then we have a vaccine. So you have a vaccine that works and people feel confident in that vaccine and they feel confident going back out. That's when the Fed stops buying mortgage-backed securities. So we have the buffer of the 60 basis point buffer that companies are going to use to buffer that. But right then is where they're going to have conversations going, hey, listen, we need to let go 25% of the staff. Okay. If you're in this place right now where you're feeling scarcity and I have to hire right now and I have to hire right now and I have to, and Derek, you don't understand how busy I am and I'm doing it right now. You're hiring when you have the least amount of people available at the highest price. Does that make sense? So from a strategic standpoint, if you're hiring right now, make sure you're hiring for long term. You know what? There's not many times that I would say this, but this is a fantastic time to hire somebody that has a really high character and really high competency level that's maybe not in the business so that you can keep them paying less. And if you're building a long term team, I think this is a really wise time. There's not many times, if you ask me, Derek, hey, what should I hire? I would probably say, hey, go for the experience. This is a time right now to make sure that you don't overpay. I'm seeing a couple clients doing that. I think it's super wise, super wise. You're going long on somebody with a high competency level and a high character level, who's got a good energy right now. They can be such an asset to your team long term if you're willing to invest. Big deal. Hiring the grumpy processor that's been doing this for 25 years and paying 200 grand, it's not going to end well. What else? Okay, Jenny, did that kind of answer your question about the hiring? No, it didn't. Okay. Jenny says, Derek, can you speak to those who are hiring some of their first support staff? How much should they have in liquid reserves before they make another hire, 6 months, 12 months, 18 months? That's a great question. Okay. 18 months. I really think you should have 18 months right now in this. The gift of this environment right now is to clear the financial milestones. As I said, I want you guys to feel super powerful when I'm going to call it April. Nobody knows, right? But it'll be sometime around April that rates start going up and you see refinance volume go down. Again, this is just for lenders, realtors. But right then, I just want you feeling powerful. I don't want you panicking. I don't want you letting somebody go. I don't want you in fear. I don't want you in these bad places. Okay. There's going to be a lot of people exposed when that happens. And a lot of these people are making those decisions consciously too. As I said, they're okay with it. They know the minute that happens, that's when people are getting the pink slip. Julie, Dante's assistant. Dante works with his wife, Julianne. Julianne just heard you say I should pay her less. You're in trouble. No, I don't think so. I don't think you pay her less. Who else? Anybody else have any questions or anything you want to talk about? Anything else? Any takeaways that you have from this? Anything that you think serves you? Anything? Do you guys feel better about what's going on from a data perspective? This makes sense from a strategy perspective on how to look at these times and those type of things. Do you guys concur with the data and then my opinions on the data? Does anybody have a counter to that, which I would love to hear? Yeah, Brooke said, I think morning routine is really important right now. And I totally agree, Brooke. It's so important right now. Guys, your mental state, the next one that I do in 2 weeks, so make sure you're on that one too, will be about how to have a mindset so that you can thrive during this time. The next one is mindset. The only reason that you won't thrive during this time is if your mind starts to betray you. And as I said, there's never been a time that I've done this business for over 20 years that I've seen the amount of what I call the doomsday brigade. But if you listen to them long enough, and man, it can be your family, it can be your friends, it can be your closest friends. So you go to your closest friends to hang out, and then they're in so much fear and panic right now that you come out of that being like, God. Christy Farmer, what are your thoughts on hiring additional loan officers right now? Thank you. Well, the biggest concern that I would have with hiring loan officers is, do you have the capacity to help them right now? If the answer is yes, it's a wonderful time. If the answer is no, that can be like the worst thing for your business right now. You bring them in and then they can't get their loans and you don't have any time to help them. And um, just look at capacity to answer that question. I've had a few clients that ask me the best way for them to be sharing the info about the 50 bumps to refis. I've seen a couple people, Jenny, post. I think they're doing a really good job around that. Here's the deal. This is a fascinating human psychology thing. Is people tend to not do something until they sense their scarcity. Okay. For you guys, the minute that rates start going up, this is for loan officers, you're going to see a lot of people reaching out. The train's leaving the station. I better jump on. Right. So you can use this 50 basis point bump in rate to create scarcity because it's true and it's real. Rates are going up by 50 basis points. And I don't even know if you need to get into it in the next, whenever your company's doing it, the next month or so, in the next 30 days, the next 15 days, put some scarcity around that and say, please reach out now if you're at all considering refinancing. And then you can also do it for buying too. Rates, well, it's not going off for buying. So absolutely use scarcity. That's why, like, when you sign up for anything, I do it too. It's they always have a cutoff date. Hey, listen, registrations are only gonna be open for the next 5 days. They do that because people won't sign up until they know that there's a scarce time around it. So same thing. You're gonna see a blip the minute rates start going up and you start saying, rates have just gone up. Please get in line. Reach out. You will see a lot of people do it. Oh my God, rates are gonna be at 4% really quickly. So I would use this as absolutely a scarcity. Yeah, Brad. Oh, let me, Jana, really quick. So it seems like we are in it, right? So busy, it's insane. Absolutely. It seems like the systems go out the window and our client experience just goes down the toilet. Well, I don't know if I would just jump on that. I would love some input on how to maintain a beautiful client experience in spite of the fact it's taking us forever to close our loans due to capacity. So there's a lot there, Jana. First off, a lot of people are going through that right now. Jana's just come back into coaching, so she probably hasn't heard me say this for the last 6 months, but it is so important at the point of sale when you're talking to them to get an agreement with them that is really that you're setting the expectation with them that this is going to take a long time. We need all of your docs in within 48 hours in order to make this work. We're at all-time record volume, and this is going to be painful for you. Also, let me tell you, Jan, if you're my client, I would also say this. Right before closing, we are 100% going to ask you for some documentation that's going to make you annoyed. It's going to happen. The underwriters are so busy right now. They don't have a better way to handle this right now. Day before, and your first thought is going to be like, why didn't she tell me this up front? There's no way for me to know. And Janet, then I say it like this. Hey, Janet, I just want to let you know we're on the same team. I'm here to help guide you through this. But I can tell you that this is the most difficult time in recent memory that we've had to get a loan. So I'm here to help. I'm here to guide you. And this is what's going to happen. You're going to make it super easy on yourself. 48 hours to get every documentation. We'll get it in. And they are going to ask for something the day before closing. And so just, maybe set some time aside for that. So you close it on Friday the 27th. On the 26th, from like 12 to 3, set some time aside for whatever they ask for. Have access to those documents. Be ready for it. Want to let you know we're on the same team. I'm here to help. I'm here to help you. Let's move forward. That's how you set the agreement with them. And if you get that agreement, and then I say like this, Jana, are you cool with that? Does that make sense? I remember when you were at the live event and you counted how many times I said, does that make sense? Do you remember that? You're like, Derek, you said it 23 times. Okay, but what I'm doing is I'm getting an agreement from people, right? And so when you're having that initial conversation with somebody, if you say, does that make sense? Or are you cool with that? Or do you have any questions with that? There's an implicit agreement that goes on between them. They're going, okay, I'm cool with that. Okay, you're cool with that. So when the day before, when they want to yell at you, they have a thought of, oh my God, Janice said that. She told me exactly what that was going to happen.
I think I do that, and then they still want to complain. They still want to be stressing me out and yelling at me and telling me what's going on. Oh, I'm going to cancel. Quicken can do this faster, blah. And it's like this constant storm of stress over these deals. And I just feel like we try to set the expectation. You try to provide this amazing experience, and still you're getting hammered. I can't be alone in this. I don't think.
No, you're not alone. Everybody's going through it. But there's two things that I heard in your language is, this might be hard to hear, but it's the truth. I don't think you can provide an amazing experience in this market. So I know you might not want to hear that, right? But like, would you rather go to a restaurant and they say, this is going to be an amazing experience here, and we're going to have all this stuff and and it's going to be like that, and the restaurant's absolutely packed to the gills, and they're running around giving food to everything. Is it better that they say, hey, listen, we're super busy right now, but we want to get you in. It's going to be an hour and a half wait. Are you cool with that? And the waiters and waitresses are absolutely like stressed out right now. Is that still good for you to do that? So I heard it like I know your integrity is off the roof. I know everybody wants to provide an amazing experience, but you're running a restaurant that's absolutely overpacked. There's hundreds of people outside right now, and you have to learn how to deal in that kind of market. It's not you still serve people, but you serve them by telling them, this is going to be an hour and a half. Wait, are you cool with that? And you still say it nicely. And then when you get in, the waiters and waitresses are running around like a chicken with their head cut off. They're like, do you still want to do that? Like, we're so committed to this, to giving you the best experience that we can, but that's just not what's going on right now. So honesty really, really serves them. The other thing that you said in there, and I want all you guys to hear this, is next week's or the next Motivation Monday, is I'm not saying this is easy, Janet, and this goes for everybody, but nobody has the ability to stress you out. Okay? They're stressed out. And where we can all grow right now, this is what I'm going to talk about next time, is not allowing that stress to bleed to us. So you do the agreement. You have the stuff. You did all the stuff. I did exactly what Derek said, and they're still yelling at me before the thing, right? It's going to happen. The upper level right now is where you don't take that on. And I'm going to teach that next time because it's so vital. I couldn't do it justice. I want to do more research before I get into it, but I want to give you guys that kind of level. Like doctors go through this, emergency room doctors go through this, that they live their life with everybody in a state of panic. All the friends and family want to know what's going on all day long. The stuff that I'll teach next time is based on me being in coaching groups with emergency room doctors. And I was listening to them tell what their day was. And I was like, you had to tell a 12-year-old boy that his father died? I mean, I was like, wow. And then, I mean, it's so different than what we go through. So the clients that we have do think they're dying if they don't get this house. They do, right? But they're actually not. Too. The emergency room doctors, they actually are. And so they are trained a lot better than our industry is trained on this. But I'm going to do it next time. I'm going to do it, for the whole Motivation Monday. It's so, so important, that training. All I can tell you is you do not have to take on the stress of everybody else. It is not your job to take on that. It's not. It's your job to give the best service and to tell them the most honest that you can do, to serve them at the highest level, to tell them exactly what's going to go on and exactly this. And then, yes, Janet, they're still going to panic on you. They will. But then it's your job not to take that on. It's your job to stay super calm in that storm. Hopefully that helped. Brad wants to share a quick thought about home prices. Go ahead, Brad. Yeah.
Yeah, I really liked your stats about the level of inventory available, and even if all the FHA loans came to market, we'd still just be at a normal level. One of the things that I've been sharing with clients are like, man, is now a good time to buy? Well, part of what you're buying is the cost for rates. So like you said, with rates being so low, you can hedge against future inflation. The Fed's expecting, the Fed's looking at, okay, rates are going to go, we want to run this above the 2% target. So when you put $3 trillion into the economy, that devalues our money, which means if you own a house, that's going to appreciate as the value of our dollar goes down. So all this stimulus will lead to future inflation, even stripping out the low supplies that are driving up the value further. So long term, if somebody's going to be in a house, it's a fantastic time to buy.
Absolutely. Absolutely. Thanks for sharing that. Michael Day said, yeah, it's so important to set that agreement up front from a place of honesty. Anne Marie, do you think that companies should be limiting the number of refis per LO? I'm experiencing delays in purchase timelines, and I know it's a company-wide challenge, but my processor serves 3 LOs is being bombarded by more refis from 1 LO. I think it's impacting my ability to produce more. I mean, I wouldn't feel comfortable commenting about what companies should or shouldn't do. I don't have enough information. I can tell you that the CEOs that I've talked to and that I've seen, they're all under some level of extreme panic on overcapacity issues. There's not one that isn't. How they're handling it, they're all a little bit differently. But this is a market US wide issue that I don't see as a company issue. Yeah, Brooke Lowry says, I feel like a pre-recorded video addressing this for clients. I mean, I think she's probably talking about the expectations where you're saying, hey, listen, this is what's going to go on, and this is how it's going to go on. And this is like, if you have it in video on an email too, that's great, right? They can look back on it too, so that they are yelling at you. You're like, I promise I sent you a video telling you exactly how this was going to go down. Yeah, under promise, over deliver. Rick Melville says, Brooke, I do a video for every client for every loan that goes to underwriting. And then when the complaining starts, I listen for a small amount of time, but then I say, remember when I told you it would be a little frustrating, and then I sent you that reminder video. That's where we are right now, and most everyone calms down. There's always 1 or 2 potato heads every month. Yeah. I'm not sure, Melissa. What was the analogy? I had to mute for a second. I'm not sure which one I was talking about. So guys, we're at 1, so I'm going to end it now. Busy restaurant. Maybe that's what it was. I think the busy restaurant's a good analogy that everybody can get, that everybody can understand. Everybody's had that experience on a Friday night where you go to an awesome restaurant and they say it's an hour and a half wait. They definitely don't, you walk in the door, they definitely don't go, oh my God, we're so happy to see you. This is gonna be an amazing experience and you're gonna love every second of it. They're like, ah! All right, cool, guys. We're at 1 p.m. That was super fun. Hopefully that was super helpful for you guys, and gives you some calm about what's going on, gives you some calm about the market, gives you some insight on how to handle the clients. And then, as I said, just be the calm in the market right now. And we're going to get you through this. We're going to get you through this really smartly, so that you feel super successful and that you are set up for years to come and you thrive. You guys have an amazing Monday. I'll talk to you soon.